Good afternoon, Irene, Dipo, and Coca.
Hello, good afternoon, Larry.
Good afternoon. Good afternoon, Mr. Itomi.
Good afternoon. Hi. Hi.
Thank you for being part of the webinar today.
Thank you. Hi, how are you?
Yeah, we're fine, sir. This is a project we're trying to perfect provide access to legal education for lawyers across Africa. Today, we're looking at the equity market. We're looking at the trends and the challenges in the equity market. I have with me today Mr. George Tomi, the pioneer chair of the NBA section on business law, who is chairing today's session. And I also have Mrs. Irene Robinson Ayawale, the head of legal at the Nigerian Stock Exchange. I have Mr. Abisoye Koka, who is a director and CEO of Care FX, and Mr. Dipo Ribido, who is a general counsel. We thank you all for being part of this. I will now hand over to Mrs. Tosin Shulanke, who's our head of training, to take over from here.
Welcome everyone to the ESQ Law Practical Lawyers Academy Launcher webinar series. We are delighted to have you all here. My name is Tosin Shulanke, and I'm the administrator and head of training at ESQ Training Limited. At ESQ Training Limited, our mission is to expand the frontiers of continuous professional learning. This we achieve by providing the highest quality accredited continuing legal education in a variety of formats for African lawyers and businesses. We are also committed to the development of a robust and easily accessible comprehensive source of practical information and continuous learning education and professional development for African lawyers and their clients, thereby boosting access to justice. So we offer courses across various areas of law, which we categorized into academies, like the Litigation and Other Dispute Resolution Academy, Intellectual Property Law Academy. We have the Arts, Sports, Media and Entertainment Law Academy, the Construction and Capital Project Academy, the Capital Market Academy, and many others. So today we have tagged our series, the Launch Our Webinar series, and they are slated to hold at 1 p.m. during lunch breaks. So usually they would hold 3 times every week, Mondays, Wednesdays, and Fridays. And in order to accommodate our Muslim participants, the Friday webinars will hold at 11 a.m. instead of 1 p.m. And after every session, we will also provide the resources, in attractive and easily accessible formats on the go for everyone who is interested. Okay, so we also provide trainings on topical issues and new areas of law for the young and vibrant, areas like fintech, cyber law, power, energy, and many others. And at the moment, registration is ongoing for our 12-week virtual distance learning course on power. It's titled The Dynamics of Power Contracts, Regulation, Contract, Negotiation, Documentation, and Project Financing. It commences on the 16th of February 2021. To get more information about all this, please send a mail to o.shulanke@es-law.com. So today's webinar focuses on the capital market, and the purpose of today's webinar series is to take a cursory look at the trends and the challenges of the Nigerian equity market. Our lineup of experts will do a reflection on and a review of the Nigerian equity market and examination of developments in the market and the future of the market. They will look at the opportunities and prospects of local and international investors, where is money coming from, the unique opportunities and challenges that lawyers must be mindful of, even as the counsel seasoned investors and people relatively new to the Nigerian investment environment. We'll also be looking at the recent trends in the area of investments in Nigeria and how this will affect commercial enterprises and their lawyers. They will also consider the challenges in the Nigerian equity market recommendation. So today we are privileged to enjoy the network and connections of our panelists who work on these things, and these issues, they work on them every day. So while the session is ongoing, if you have questions, you are free to type them in the chat box. At this point, I am delighted to introduce the moderator of today's webinar. She is Irene Robinson Ayonwale. She is the General Counsel and Head of Legal Services Department of the Nigerian Stock Exchange. Mrs. Robinson Ayonwale, the floor is yours.
Thank you very much, Tosin, for that introduction. And good to know that, Esquire Practical Law Limited is doling out a lot of these trainings for lawyers, because it's quite key, especially with respect to the world that we are in. So, to begin the webinar, I would please call on our chairperson, Mr. George Itomi, to kindly help us open the webinar. Thank you, sir.
Good afternoon, everyone, and thank you, Irene, and thank you all the panelists and also all members of ESQ. I see that the sponsors of this event are G. Elias and Co. and Advocate Law Practice. I also want to extend my thanks to them. I am delighted to be here today, and I'm also delighted that the topic for discussion is a review of the Nigerian equity market. We all know that so much is going on in the world today, and the equities market has been as volatile as it can possibly be. So from across all the stock exchanges in the world, the volatility has been such that predictability is very, very hard. However, one thing is very certain: you cannot wish the market away. For as long as the world continues to exist, there will be risks that will be taken, businesses will be formed, and there will be continuous trading in shares. And I'm sure you know, recently the Nigerian Stock Exchange attained a huge milestone when it converted from a mutual association to a publicly limited company. That of itself is something I think lawyers should get familiar with. There's so much going on, because the pathway to to growth in the Nigerian economy is a very robust equities market. So what are the opportunities therefore for lawyers to participate in this? I mean, apart from being investment opportunities, there's so much work to be done. I'm sure Irene would let you know that one of the regrets many of us have is that we do not have Nigerian lawyers with the sort of voracious appetite as we ought to have in playing in this field, which is a pity, because elsewhere there are lawyers who do nothing but specialize in the equities market. And so they do quite a lot of advisory work. So whenever opportunities present themselves, I hope lawyers can stand up to it. This actually informed the formation of the section on business law. At the time we were pushing for new frontiers, we were asking the Nigerian lawyers to make a case for being strong voices in the evolution of the Nigerian economy. Thankfully, and I believe the NBA has had a much stronger voice as a result of the vibrancy of a lot of these sections. I don't want to take too much of the time of our participants. Again, let me welcome you. I just want you guys to savor this moment and listen to what the experts have to tell us. So again, welcome, and I look forward to a robust 40 to 45 minutes of discussions. Thank you.
Thank you very much, Mr. Chair, for that, very, very apt remarks around the need for lawyers to actually grow more capacity around specialized areas such as the capital market. I do confirm that we don't have yet enough lawyers practicing in this space. We thank God that actually there are quite a lot of the law firms that are already playing in this space and giving advisory, but the truth of the matter is that it's all about sustainability. And so more and more of the young people need to get involved in this practice. So just to set the tone a bit in terms of, the presentations that we're going to receive from our distinguished panel members. So I would just like to point out that, Mr. Chair has already talked about the volatility that we experienced last year. And basically, we all know that notwithstanding the volatility, that the Nigerian equity market actually, was resilient during this period. And we know that various factors which plagued, the market last year and basically the world over, historically low crude oil prices, which shook the Nigerian economy, the economic challenges brought about by the global lockdown, as well as, the lockdown itself actually triggered a global panic selling among global investors. So based on that, we saw, a lot of the volatility last year, which was not just restricted to the Nigerian equities market, but it was actually globally, all the securities market worldwide. But notwithstanding, the world markets actually closed the year in positive territory. Really, the final quarter of the year saw global investors react positively to certain factors such as the US election results, announcement of promising COVID-19 vaccines, recovering consumer demand and stabilization of oil prices, as well as geopolitical risks. Good news for the Nigerian equities market. We at the Nigerian Stock Exchange, we saw renewed investor optimism coupled with improved economic conditions and then the low fixed income yields. All of that propelled the year-end bull run for the Nigerian equities market. And I'm sure that a lot of us that have followed the news last year noted that of the 93 global equity indices tracked by Bloomberg, the Nigerian Stock Exchange's all-share index emerged the best performing index in the world, surpassing even the S&P 500, the Dow Jones Industrial Index, and other global and African market indices to post a one-year return of plus 50.03%. I just felt it's good to understand the backdrop of what we've entered into this new year, and that it's not just been, all gloom and all of that, but that there's actually been, the year ended on a very positive note. Now, the Chief Executive Officer of the Nigerian Stock Exchange yesterday gave the exchange's 2020 market recap and 2021 outlook. For those of you who did not have an opportunity to attend that, I would encourage you to go to our website and just, look at the event and then, just to get abreast of what happened last year and the outlook for this year. So having given that introduction with respect to last year, I would invite Mr. Dipo Okoribido to please give his presentation. Thank you.
Thanks, Irene. I wasn't sure if they were going to put up, whether ESQ was going to put up the slides. Tosin, do you have them? Try and confirm.
Yes, we have your slides.
So are you going to put them up? Confirm yourself.
Okay. Let's put them up.
Thanks. I mean, while she's sorting out the slides, just sort of coming off the back of what Irene was talking about, my focus tends to be more private markets these days. It's a bit something. I mean, it's not exactly the same kind of story, but it's a similar trend. On the one hand, obviously, 2020 was a tough year. There was the pandemic. There was oil price crash. It was difficult from an economic perspective. We had negative growth, talking about recession. So some of those things are, well, they are what they are. I mean, in general, if you've been following economic numbers, you will know as well that foreign direct investment in Nigeria it has continued to remain low relative to historical levels. But the truth is, even with all those negative headwinds and also that negative backdrop, things are still happening. Over the last 5 years, a tremendous amount of capital has been raised for investment in Nigeria, West Africa, most of Africa, but I mean, focusing on Nigeria specifically. There's lots of asset managers who raise private equity funds, venture capital funds that have been actively looking for opportunities in Nigeria, and the pandemic hasn't really impacted that search for opportunities. People are continuing to invest. Across fund managers who raised capital, had the good fortune of raising capital in 2017, 2018, 2016. Most of those folks are still investing their capital, and I mean they have defined timelines within which to invest it. So no one really has stopped doing deals despite everything that went on last year. Um, in terms of opportunities, I've been in sort of talks where people have said, okay, well, post-pandemic or post the economic difficulties, where are the investment opportunities in Nigeria? And I mean, yeah, frequently people report what those new emerging opportunities are, but to a large extent, the list seems quite similar to what it's always been or what it's been for Nigeria in recent times. People are looking very closely at fintech and doing many deals. At work, we have a weekly newsletter that we get of deals that have happened in the market, and there's almost always a fintech deal there. Someone's raised money, Paystack had that big fancy exit, but lots of guys are doing things there, and lots of money is going there. Beyond fintech, there's activity in healthcare, which there's always been. I think maybe because of the significant gap between demand and supply in Nigeria. And as you would expect, even in COVID times, normally when economic conditions are tougher, people tend to trade down. So from fancy luxury or discretionary goods to more essential, more uh, more essential, more no frills goods. So, but in a market like Nigeria, where the large space of the population is really low income, the big opportunity, even in non-COVID times, has always been at that segment of the market. So opportunities still tend to be around fintech, financial services, healthcare, and mass market products. Um, that's on the background. What I wanted to do today was focus on what trends I've been seeing from a somewhat legal perspective, looking at investment opportunities, and just highlight things that maybe lawyers might take out of that. Can you go to the next slide? So I mean, this is just at random from my own experience, and I suppose maybe interesting is not necessarily the word, but just a couple of recent things over the last year that we've been experiencing from a deals perspective that I think I was talking about. I won't go in any particular order. Maybe the second one, it has been somewhat the most frustrating, but also maybe most interesting. I don't know whether it's a coincidence, whether it's a trend related to the current administration, but the experience has been that maybe over the last 2 years, in a couple of regulators, they changed boards. I mean, we know that there was a significant shift in legislation around mergers and acquisitions, but also there was a new Companies and Allied Matters Act, new DG at SEC, new directors at PENCOM, and a couple of other regulators, new folks at FIRS as well. The result has recently been that things are just taking a lot longer. You frequently find when you are executing a transaction and you make what used to be a routine application to a regulator, that all of a sudden they are looking again, they're asking more questions. And it's not so much, the issue is not so much with the scrutiny, it's just the time it takes. You end up in a situation where the transaction ought to take 6 to 8 weeks. It's taking 12 to 14 weeks. And not because there's a unique complexity in a particular transaction, but because new folks are trying to understand or are a bit more cautious about what kinds of approvals they give. Maybe a random example that I can share is a scheme of arrangement that we've been trying to execute recently at work, where we had to go to the FIRS for their standard FIRS clearance. And I mean, it's a scheme of arrangement, so there's no sort of transfer of assets between companies. It's just a restructuring of shareholding of one of the companies. But the FIRS has been asking essentially 6 or 7 times the normal level of questions, and the clearance that we should have gotten normally within 1 or 2 weeks, it's been 2 months, and we're still chasing it. Beyond all the ones that are sort of related to regulators, there's also been CSC navigating their new protocols around COVID and what it means in terms of lawyers having to rely more on CSC personnel to do searches and to assist with filings. You know, in the old days, you could handhold the process and sort of ensure that your documents are moving from desk to desk. But since the lockdowns and then the resumptions after and the adjustments for the pandemic, there's a lot more reliance on CSC folks, and it's making everything take longer. Beyond sort of extended wait times, recently, I think in November last year, the FCCPC, the Federal Competition and Consumer Protection Commission, finally issued regulations and merger control guidelines. These are quite expansive, cover a lot of subjects, and in most areas, it's great stuff because it provides clarity around what they might consider in determining whether there's a competition issue or not with a merger. But the particularly interesting thing from a deals perspective in general, maybe from an equity deals perspective, is just the new rules for determining when there's a change of control that requires regulatory approval. Once upon a time, folks kind of just understood this as if you were buying control of a sizable company, then you might need to go to a regulator for approval. But I guess in trying to stay in touch with recent trends across the world, the FCPC's rules look at acquisitions more broadly, and they look at many instances where even though you are buying a minority stake in a company, or you're just making a routine 10, 5%, 20% investment in a company, you may be signing shareholders agreements or other documents that give you what they call material influence over the company. And then all of a sudden, even though it's a minority transaction that wouldn't have required regulatory approval before, it now requires regulatory approvals. So their rules do provide some indicators for what they will look at to determine whether there's material influence. But it's a broad range of subjects, including things that lawyers didn't necessarily think about much in the old days. Some random examples that I have up here are attendance and voting of other shareholders at meetings. So all of a sudden, for instance, where before, if a lawyer was doing a due diligence, your focus was really, okay, well, who owns the shares? Are there any regulatory challenges that came up from minutes of meetings? Now, because you also have a worry about whether it's material influence and therefore requires regulatory approval, you potentially have this looking at attendance records. Have other shareholders been actively involved? Or if we are going to end up with 2 active shareholders, that potentially means a change of control in a sense. So those are new things from a regulatory perspective to look at. A couple of other things that I thought were worth talking about is, as typically happens when economic conditions are a bit more difficult, there have been in recent times different stories about disputes between founders and institutional investors. Maybe here, just to take a little bit more time to talk about this. In Nigeria, that is in private markets, a lot of the investments that happen, a lot of the deals are with companies, family-owned businesses or companies who haven't previously taken any institutional capital. So they've not necessarily dealt with external investors. To a large extent, they've been financing their business from their pockets or maybe with some traditional simple bank debts. They haven't had to deal with bondholders or big asset managers or other people. So they operate in a particular way. And then what then happens is an external investor comes in, you have to sign some sort of governance agreement. And in good times, the agreements are basically just there to fulfill all righteousness. But when things get difficult, people then start looking at what rights they have and how they might enforce those rights. And I think over the last year, we've seen some of those rights tested. And it feels to me like something that lawyers need to be worrying about, just how we think about how we might navigate those kinds of issues with clients, but also in working on shareholders agreements, being sure that the kinds of provisions that you have in the agreements in terms of governance and minority protections are provisions that the parties really genuinely understand, so that nobody's taken by surprise if someone is looking to enforce a right, but also that are practically workable. Maybe I think the final thing I'll just talk about in terms of interesting trends is about SPACs, special purpose acquisition companies. This has been a very big thing in the US over the last year. And it's something that I know the NSC is already on top of and have been working on rules. I think probably since the very the boom years of 2008, 2007, 2009, there haven't been that many IPOs. I mean, there have been some, obviously, more recently, MTN and Airtel came to the market, but IPOs haven't boomed the way they did once in Nigeria. And I mean, speaking from a private markets perspective, they haven't necessarily appeared like a feasible exit opportunity for many private investors. And I guess that invariably would have affected just how much legal work lawyers are doing around IPOs. SPACs still, like, they have the potential to change this. For SPACs, essentially what happens is folks essentially incorporate an SPV, a special purpose company, and list that company immediately, raising capital from that listing, and then use that company to then find a business that they were originally interested in and then acquire the company. So it's like a blank check company. Why I think it might help IPOs is a lot of times the challenge with IPOs is that the owners of companies are worried about whether they'll get the right valuation from doing an IPO. So if we are a private equity fund that have invested in the company and we are looking to exit, we aren't as thrilled today about listing the company on the stock exchange because we are not necessarily sure what kind of valuation we will get. SPACs sort of avoid that issue because basically you can raise a shell company, you raise capital into a shell company from PFAs and co with a promise, and then that shell company then goes and identifies the manufacturing business or healthcare business or fintech business that you were interested in to begin with, and then does a deal with that business. So I know the NSE has rules for this already, which to some extent mirror rules in other jurisdictions. There seem to be sort of clashes between those rules and provisions of both the old and the newcomer. So it seems like something that might be relevant for the future, but something that lawyers need to start thinking about. Finally, obviously, we all celebrated the passing of the new Companies Act. I think a lot of the talk that I've read or heard has been around how it makes a big difference for small companies in terms of giving additional options and removing what appears to have been a burdensome requirement for more than one shareholder. What I personally would have liked would have been to see more provisions that provide flexibility to investors. As I was saying before about many of the deals in this market typically being private market with family-owned businesses. Many times you find yourself in situations where investors want they want to inject, say, I don't know, $10 million into a company, but the company does require that money, but the owners are reluctant to let go of control for whatever reason. So you end up in situations where even though a company needs quite a bit of money, they only have a limited amount of regular equity available to give. And then investors are then forced to look at sort of different kinds of structures to accommodate the extra capital going in without upsetting those voting rights. In many jurisdictions, you might have like a class of preference shares that are entirely about the return, but don't come with any voting rights. Unfortunately, we don't really have that much flexibility in Nigeria around issues like that. But I mean, so it's still like something that the CAMA might have addressed, but I didn't address. So that's just a couple of interesting trends that I thought were worth highlighting. Please, can you go to the next slide?
Thank you very much. So just to, because we're shy on time a bit, so just to say that you have 5 minutes, hopefully you'll be able to, do justice to some of the other presentations.
Yeah, so I mean, this is my last slide, so I'll run through it quickly. I guess the idea was to say, so what do all these trends that I highlight mean for lawyers? And I think the first one is just as you work with clients to do deals, you need to take the time to understand what the client is trying to do. I mean, maybe this applies in every case in any sense, so that you can navigate what is an increasingly complex and increasingly time-consuming landscape to get deals done. I think just as important, and maybe not necessarily always given the attention it deserves, is that you need to think about so practical and realistic due diligence reports. A lot of times, speaking from an in-house perspective, a lot of times when you're looking at a potential acquisition transaction and you hire lawyers to do legal due diligence, you hire financial advisors to do some financial and tax DD. Many times it feels like you end up relying more on the financial and tax DD because it's a lot more straightforward. They're highlighting liabilities that you have to account for that immediately impact price. Many of legal things can be abstract. I think lawyers can do more to focus on sort of practical issues, both around how the deal itself will happen, so things that might impact price or structure, but also around the landscape in which you might execute the transaction. So clarity around issues like material influence, and also how many regulators you need to speak with and what you might expect in terms of time. I think managing expectations is a very important thing. Because the landscape is getting increasingly complex, clients need to understand how long something might take, even if all parties are on board and it seems from their perspective simple. Then something that one would like to see more of, and that maybe folks can think about in general, is just engaging with regulators. A lot of times things are held up, things take time, and even lawyers are not shown in the best light because a regulator is trying to understand something, or a rule is vague enough to be interpreted in different ways, and everyone's assumed it will be interpreted in a particular way, but the regulator is going in a different direction. So I think that there's room, if without necessarily being in the middle of an engagement, if lawyers are sort of engaging and working closely with regulators to refine their rules, improve clarity, and also to just be sure that regulators understand different kinds of transactions. Like that might reduce the execution times, but also not allow the lawyers then look bad when you lay something out as simple and then we get to the regulator and it's a bit more complex. The final point is around more standardized equity governance agreements. I don't know how many people are familiar, but in debt markets, there's maybe in capital markets in general. I mean, if you are doing a bond issuance, the legal agreements are almost fairly standard, so you don't really end up having too much negotiation of them. Even for bilateral loans in the UK, the Loan Markets Association developed standard form documents that significantly reduce negotiation time, but also help all parties to be clear as to what agreements are saying. So it's something that I think folks should start thinking about around equity transactions as well. Just so if we had more standardized shareholders agreements, people would generally be more familiar with it, and in principle, it should reduce to some extent the potential for disputes between founders and institutional investors. That's it really. Happy to continue the discussion.
Thank you very much, Deepo. It has been quite an interesting presentation. You have actually touched on so many areas, and I know that a lot of people will have questions. You noted the fact that the foreign direct investment into Nigeria directly may have dwindled a bit, but that has not stopped the private venture capital institutions or companies or firms from still investing and that we have some success stories like Paystack that we can refer to as at last year, and several other of such events. You also talked about the emerging opportunities which arose even from the situation last year around fintechs, the healthcare system clearly, and that these are areas that lawyers should look out for in terms of trying to gain capacity as well as contacts towards taking advantage of these opportunities. You also referred to new legislations that have come in, the FCPC guidelines, which deal with mergers, which deal with control. Thank you for that information. Also around SPACs and obviously the Nigerian Stock Exchange's rules around SPACs. You are correct, and it is correct that a lot of lawyers should actually take advantage of the time that they have before firms and organizations begin to actually take advantage of SPACs. So people should read these regulations and get acquainted with it. I know that there are some links that, I would like to ask you questions about, but, we'll take those questions after Mr. Abisoye Koka as well has given his own presentation. So please, over to you, Mr. Koka.
Thank you, everyone. Thank you, Dikpo. Thank you, Ms. Ayanwale. Thank you, Mr. Chairman, and everyone ably participating in this discourse. Very well said, Dikpo. My name is Abisoye Koka. I'm a legal practitioner and an entrepreneur. Considering the fact that the word is loosely used, you've heard things like techpreneurs. For those that don't know, it's important that I affiliate with the lawyer folks as well, even though being a legal, being an entrepreneur as well. So I'll be talking today on a very interesting discourse. I think Dick was talked a bit about it. Ms. Irene being here and being from Nigerian Stock Exchange, it's an essential discourse to be had. More importantly, because of the fact that the Nigerian stock market and the fintech space is an alliance that is a marriage that is welcome to be had. I'll be talking about, the harnessing the Nigerian fintech potential. I'll try to share my screen very quickly while this discourse is on. So the content compass is as shown. I'll be touching on the overview of the Nigerian fintech industry. Please hang on. The expanding horizons, the niche opportunities in the fintech industry, the fintech industry and the Nigerian Stock Exchange, the listing requirements of fintechs, and the benefits of listing to fintechs and investors alike. It's good that Deepo spoke on the area of IPOs. We know that in other countries as well, we have the likes of Facebook with its initial listing tech IPO at about $16 billion at the initial time. We could talk about Alibaba that raised about 25 billion in its IPO, tech IPO at the time in 2014. We know that, the regulators are hammering down on him at this time, but they were going to go into the market to raise another 36 billion right there in the stock market. But the most important thing is that there's huge potential in the fintech space and the marriage with the stock market. It's a big deal for most markets internationally. For fintech, we know that it is a becoming market, but with the joy propositions of the likes of Paystack that had pretty much a buyout of over $200 million, we started getting the attention in that space. More importantly as well, we did hear about the $200 million 10% acquisition of InterSwitch as well by Visa. That was also a big deal. So more importantly, let's just look at a few things, a few highlights on the fintech industry for those lawyers who see it as a new market. So generally, fintech is a practice of combining different aspects of finance and modern day technology solutions to improve the delivery of traditional financial services. As we know, the fintech term is an abbreviation for financial technology. It has become a popular trend in business space, and the parlance is becoming more and more common. And fintech is designed to, as banks would not like to hear it, or traditional financial services providers, threaten, challenge, or eventually overshadow their processes. The speed at which the industry is expanding is enabled by changing customer demands, technological evolution, and huge VC funding. And the services range from everyday banking solutions and mobile payments to blockchain technology and even big data analytics. So before now, financial services offered a limited variety of services under a single umbrella. The scope of these services range from traditional banking activities to mortgage and trading services. However, the introduction of fintech has unbundled these services into individual offerings. This integration of finance and technology has cut down the cost associated with transactions and has led to a great efficiency. The industry is expanding into non-core financial aspects, and this is creating a variety of niche opportunities for both fintech and investors. So pretty much across credit facilities, financial robo-advisories, crowdfunding, mobile payments, insurance technology. It's good to note that in the area of credit facilities, consumer lending is one of the biggest markets that fintech has continued to play in. So now we go into the heart of the conversations. So it's common knowledge to know that in the past, a McKinsey report revealed that over $600 million was raised by fintechs in Nigeria alone over the past 6 years. That's a significant raise in the core markets, particularly in relation to Nigeria as a fintech space. What is that telling us? It's telling us that fintech is here to stay and the potentials are huge in the fintech market. But more importantly, what is the Nigerian Stock Exchange? That's the exchange itself. How is the exchange seeking to engender and encourage participation of more local investments into that market, in terms of the fact that a market woman could have bought, a stake in Paystack at a particular amount, and with the payouts, you understand, would have gone home with a hefty return, because that's the core of every market, to make sure that its investors are well protected and they see what comparative value in the investments they put in. So what is the Nigerian Stock Exchange doing for fintech? It's quite interesting. I mean, from the discourse and the research, it's not a novel area. The exchange has actually done predominantly well to enjoy the willingness to participate in that market. It has introduced listing rules and pretty much made it much easier for companies to access and eventually list their shares in the Nigerian Stock Exchange. I'm sure that we're all aware of the category of what we call the growth board, which encourages small cap and companies, with good corporate governance standards to raise long-term capital and promote liquidity. We know that the common play with most Nigerian fintechs is to either raise money from family and friends or go to the international VCs to bring in money into Nigeria, even though that's a big deal. But I mean, there's also potential markets locally that local people can harness, or local investors can harness. We are also aware that about this time, across the investment market, we have about 50% of the investors in the Nigerian Stock Exchange being foreigners, and roughly about another 50% being, local investors in itself. Yes, it's good investor confidence for the foreign investors to come into Nigeria and invest in Nigeria, but with the think local and build local perspective of many of our regulators and government policies, it's a good way to also engender participation of more local investors into that market by bringing confidence, of course, into that particular market. Also, it's also good to talk about, the core benefits of listing. It's important to know that, NSC InterSwitch actually did list 23 billion, 15% fixed rate series bond at the Nigerian Stock Exchange. It was a premier bond, but it illustrates the potential of the exchange in supporting fintechs and the growth companies across various economic sectors. So it's a good start for the Nigerian Stock Exchange in, creating models to allow fintechs play in that space. But it's not short of its own problems. Dikpo has talked to things across valuation. He's talked to things in relation to expertise, that's legal expertise in those areas. And I mean, it's talked about, you know, the introduction of things like SPAC to encourage fintechs, you know, to consider listing in that market. Considering its huge potential, I feel that there is more engagement that needs to be done. We're talking also about, you know, strict regulations. We've talked about the fact that there needs to be, there's a need for the relaxation of many of the regulations that exist, even though designed to promote, you know, easier facilitation of listings by reason of core engagements, you know, with fintechs and fintech businesses. It'll be easier for those regulations, you know, to suit its design and operations. Also, we're talking about the benefits of the listings to investors. It's a big deal. If the likes of Rocket, who've been in the market for many years, local markets for many years, and continue to invest in Nigeria, the likes of Visa, the likes of what's called Stripe, you know, putting in, you know, huge investment caps into the market, there's certainly huge potential in the fintech space. Yes, we understand that. I mean, the likes of the players in the premium board, we're talking about the Access Banks, the, you know, the Dangotes, and, you know, all the well-known corporates, you know, are doing, I mean, considerably well in that market. It's also very good to begin to position fintechs and, you know, the potentials of its, the huge potentials that they avail, engaging them core into that market as well. There's also, you know, an overbearing look at multinationals in that market as well. We're talking about telecoms and oil and gas companies, but I feel that certainly fintechs need to have a face and an ear in that particular market as well, in terms of increasing the market capitalization at the Nigerian Stock Exchange. It's a big deal in every other country. We're talking about multi-billions. The grade A companies, the richest men in the world today are men who are in the financial technology markets. And it is good to begin to harness the opportunity or position our stock markets to actually look into the possibility of growing our locally built fintechs with a position to be able to go into those markets, raise capital, and, do you understand, build wealth for both themselves, the polity, and indeed the local investors as well. This is in short of very important things to fintechs as well. I'm speaking to you know, my colleagues in that market as well. The truth of the matter is that corporate governance is a big deal. To get into that market, you must make sure that your books are pretty right. Now, for a country like Nigeria that, you know, the impose or the impasse is naturally one to make sure that you're trying to avoid, you know, hits on regulations. It's very essential that we look at it from core perspective. The reason why this stock exchange exists is to put customer and consumer confidence in the investors who put money there. So your books have to be good from day one. Your taxes have to be good from day one. Your audited reports have to be good from day one. So there's no Nigerian factor. The reason why the big stories go about in international communities is certainly because of the fact that their corporate governance processes are very tightened. This is also speaking to the lawyers in the capital markets. It's very essential to get abreast of many of the existing legislations that exist, that continue to exist, and of course, make sure that parleys are done particularly with both the regulators and the market as well, and the investors as well as, you know, the fintechs as well, to create an all-embracing policies that will engender fintechs, you know, to raise capital locally in the local markets, local stock markets. Then, of course, in clear summation, we know that there are core benefits to it. The fintech industry continues to grow exponentially. The growth patterns promise high profitability. That's a big deal. And ownership stake, it gives Nigerians and, you know, I'd say the common Nigerian, you know, the opportunity to own stake, you know, in these companies. If you bought a Facebook stake at I mean, at 5,000 a couple of years ago when they launched their first IPO. Today, it's in upwards of $25,000. That's good returns. Now, of course, another issue we need to deal with is the area of things like the market volatility, FX volatility. It's something we need to continue to speak to in terms of even our regulators looking at, you know, a more lasting solution to how to deal with the volatility and our core dependence on FX, do you understand, as a means of exchange. I know the policies continue to go in and out, but more importantly, if we don't redesign our processes to be more export oriented, we will still have the issue of volatility playing in that space, and that's a big deal for what's it called as well, for local fintechs, because they raise funds in the United States dollar, and the VCs are looking to get return funds in the United States dollar, but they run their operations across local markets such as Nigeria, and they return their value or their revenue in Naira. So that's a big deal, and that's where you have issues coming to where you have institutional investors coming in to take up companies locally for non-performance. So these are conversations that need to be had. We're talking to also the issues of SEC charges, the NSE charges. There's certain things that engagements need to come up in that respect. We're talking about capitalization. Because technology is a big deal and growth for technology is very essential. You either grow big or grow home. Market caps need to rise. I know that the Nigerian stock market is around the region of about 12 trillion naira and rising, should it not be, but more importantly, there has to be a play of more market caps, because technology is a funnel that needs to be fed quite well, you know, to grow in its stare. And then to lawyers, I don't think we would need to overburden that. It's essential that, you know, we look at the trends globally, and with engagements with the Nigerian Stock Exchange, do you understand, with all stakeholders in play, it's essential that we look at enduring legislations that will, you know, turn around the balance of fintechs across Nigeria, looking to raise funds internationally as the core source of, you know, of course, of making returns, and looking inwards, you know, to more local investments, more local participation, and more returns across board. That's pretty much it from me. Thank you very much.
Thank you very much, Mr. Coker. Quite a lot to chew on in your presentation. You seem to dive into the fintech space, what fintech is about, the areas, the sectors where we see the fintech at work in the various financial services sector. You gave us numbers around the MSCI data, which showed that over $600 million has been raised in Nigeria, in the Nigerian fintech space, in the space of 6 years. That's quite a huge number. And, you know, you did raise some issues around how much of that capital are we seeing channeled into you know, listings within the Nigerian Stock Exchange itself. You talked about the growth board, which was a board that was set up basically to encourage small and mid-size cap companies, such as the fintechs, to come on board and perhaps be a viable option by which the private equity firms and the venture capital firms can actually unload into the Nigerian market. You talked about the need to harness the retail investor sector, the fact that you know, listings as well as ensuring that fintechs go into the capital market is actually good for the retail investor segment. It's a way of ensuring that there's sustainable capital that goes round. You know, so the cost of listing and whether or not the cost of listing could be looked at to make it to make a more compelling case for fintechs to come on board. So we've actually had quite a lot from the two presenters presenters, we have quite a lot to chew on. So I would encourage participants to please send in their questions, so that we can begin to ask the participants about some of the issues they have raised. I will actually set the ball rolling because, there are some aspects that both presenters have actually somehow touched upon. So I will ask first to Mr. Cook will continue from there. So, we've talked about the fact that, yes, private equity firms, venture capital firms are investing in our fintech companies. They've seen that the Nigerian fintech companies is a viable market. The question I often get asked by a lot of lawyers is that they do have clients. We have a lot of lawyers that have clients in the agri-tech space. They have clients in the healthcare space. They also have clients that are fintech, up and coming fintechs that actually they have a viable business proposition, and they have, they've pretty much created a niche for themselves. But, the challenges I hear that lawyers are facing is, how do I connect these firms with private equity firms? How do I connect them with venture capital? How do we link these two people together and get them talking? So I'll start off with Deepo, and then hopefully we'll dovetail into Mr. Coker. So can you advise your colleagues who have clients in these spaces?
Okay, thanks. I mean, completely understand the question. And I think it's something that comes up quite a bit. The first thing I'll say is there's a trajectory. I guess they teach it in finance and school, but there's a trajectory of sort of the right fit of what stage the company is at and who the company should be talking to. So if you have a great idea and you are a great guy or a great girl and you are looking to start a company, well, you shouldn't be talking to, just like you can't be thinking you have a great idea, you're about to start a company and you can't come to the stock market. You can't also talk to private equity. If you have a great idea, you want to start a company, you tap into your savings, you talk to your friends and family, and you start up there. That's how you raise that money. If you've proven your concept and you think that like it appears like people are interested in your product and you are ready to take it to the next level, you talk to maybe one or two external people, maybe start speaking to VC, so venture capital firms. If you raise some venture capital money, you establish that actually your business exists, what you're now looking to do is grow, then you talk to private equity, and then it kind of goes up like that. So that trajectory exists because private equity firms there's an economies of scale within their business. Same thing with VC firms as well. So they raise a particular amount of money, but they have a team that has to deploy it. So it's just too expensive to look at really small deals. So if you are looking to raise $2 or $3 million, I mean, to find a private equity firm that's interested in doing a deal like that will be challenging. If you are looking to raise, I don't know, if you are looking to raise 50 to 60K, finding $50,000 to $60,000, maybe $80,000, finding a venture capital firm that will be interested in that will be challenging as well. So the first thing is to understand sort of where you are and who is the right fit for you. And if you can identify that right fit, and then if you identify the right fit first, you can then sort of say, okay, who are the companies in that space? So if you determine, for instance, that your business is at the size that it should be looking to private equity, which is that you've already established your business, you are looking to grow, then you can then line up the private equity firms. In Nigeria today, most of the local firms, most of them, not all of them, are generalists. So, and they are always looking for good deals, where everybody's looking for good deals. So the truth is, if you are at that appropriate stage of your life cycle, it's a straightforward reaching out. The law firms just need to, you can maintain a database of folks in that space and then reach out. And so long as you are at the right stage, they will, like everybody's looking for deals, so they'll reach out to have a conversation. How you might find sort of that group of firms to reach out to, depending on what stage you are, it's a little bit tricky. There is a private equity and venture capital association, which is made up mainly of VC and PE firms. So they do have space for sort of advisors and service providers to join, but they are managing those numbers. So it's primarily firms. So that's a good place to start, because like if you interact with PEFCA on a fairly regular level, you can get some of that. Beyond that, it's just it's almost just marketing the business itself, because firms, like it's Nigerian firms, are looking for deals almost. The issue is always like if you're early stage, but then you're presenting it to PE firms, it's just not workable because of the gap between what you want and what they can provide. But if you are the right fit, people are always looking, so they will always talk. So PEFCA is a good place, I guess. A lot of Nigerian and also maybe international firms that are looking at Africa and Nigeria are also members of AFCA. So those are places to identify firms that might be interested. You then want to get a sense of, is this a generalist firm or a specialist firm? A few firms will identify that like their primary interest is say agric, then you don't know to focus on those. Something else that's good is to track deals in the market. So people announce when they do deals. So like deal announcements are a good sign of who's investing at the moment and the kinds of deals that those people are doing. So that's a pointer to whether they might be a good fit for your client.
Thank you very much, Dipo. So, Mr. Coker, can you add on to that? And then I have a follow-up question for you on the back of that.
I think much of it has been said by Dipo, but more importantly, where the lawyers play in generally that I've seen much of their participation is in the negotiations. So they pretty much either consulting for either the company that's looking to raise capital, or say the VC or private equity firm that is looking to do business with those parties. So where lawyers are generally channeled to negotiating the deal. But yes, should lawyers have private equity firms that require, there's always money to be had. We always, there's the common saying that a good idea will always have, good funding, because there are always people who are looking to put, their resources into businesses where they anticipate returns. So if we have law firms or lawyers who are looking to play, and huge commissions come into those transactions. So if we have lawyers who are seeking core expertise in many of these markets, particularly in the area of private equity and channeling those private equity funds to local businesses or fintechs that are looking to do business, it just takes a lot of expertise and connecting. So with those connections come those opportunities in that market. So I would say expertise and pretty much being able to link, those networks one to another.
Okay, thank you. I understand that one of the participants has a hand raised. I can't see it from here, unfortunately. Tosin, please, who's that participant? Hello, Tosin.
Okay, Courtney Vaughn appears to have a hand raised.
Okay, please, can you proceed? Hello, Tosin, can you allow the person to speak so that the person can ask the question? Courtney, you said it's Courtney Vaughn.
This is Courtney Vaughn. Good morning. Can you hear me?
Yes, we can, Courtney. Please proceed to ask your question.
Okay, thank you. And thank you for such a fabulous presentation. So here's my question. What makes Nigerian Stock Exchange competitive relative to any other in the region? And for example, can you talk about criteria that the government is looking at before one can enter the stock exchange, such as how long does a company have to be in operations before they can get listed? I'm sure there are other criteria there. Can you speak a little bit about that?
Thank you, Courtney. First of all, I would just say that I'm meant to be moderating. I can respond to the questions, but because I'm moderating, I'll leave that open first to the presenters to present, since the role to defer these questions to them. Then I will then follow up after if I feel that they haven't properly answered the question. So first to Mr. Coker, who gave the presentation around the listing benefits. Then Deepak can then add on, and then I would respond.
Okay, thank you very much. Hello, good afternoon, Courtney. I would say categorically that the Nigerian Stock Exchange, like any exchange in the world at large, is primarily designed to boost customer investor confidence, and of course, corporate governance regulations are also existent. For instance, the growth board that I just I spoke to in relation to the encouragement of small cap companies and technology companies in terms of being able to enter into that market and eventually list, have certain requirements that are required. Such things as you must have been in business for a minimum of about 2 years. And you must show audited reports for that period, showing pretty much the health of your business about that time. If you haven't done so, you may have to come into that market with a company that can show that record. Do you understand? Perhaps that will where SPACs will be playing in place. But more importantly, there are core regulations in terms of corporate governance requirements. Also in terms of the term of years, how long you've done business. They would look at your books. They would look at sundry other things that are required before you can enter into the market. You must have a market capitalization of about 50 million naira as well, which is also a show that you have moved from a particular stage in your business and you're looking to expand, to get into that market. So yes, there are corporate governance mechanisms that have to be applied for you to be able to enter and indeed list with the market.
Okay, thank you very much, Mr. Coker. So Deepak, do you want to add on to that before I round off on that question?
Sorry, I was on mute. Maybe just to emphasize that in the end, like there's a perspective to this issue, right? I mean, the NSE does put a lot of effort into making the stock market attractive, but I guess, Courtney, it's the perspective you're thinking about. If you're an investor and you're wondering, well, why Nigerian Stock Exchange? She mentioned earlier in this conversation that the Nigerian Stock Exchange was one of the top performing ones last year. I mean, that's not always the case, but last year it was among the best ones. So that's a reason for an investor to consider the market. If you are a company that's looking to raise capital, well, I mean, like that's what you think about. Is there liquidity in this market? Is there an opportunity for me to raise the capital that I will need in this market? So, I mean, obviously, every exchange will have their own rules around what qualifies you for listing. But in terms of competitiveness, the question is, okay, based on kind of business I am, like, am I more likely to raise my capital in Nigeria versus South Africa, and at what valuation? I think valuation is sometimes the reason why a lot of fintechs target US investors, because even Nigerian asset managers don't give them the same kind of valuations that US investors give them. And that's why SPACs might be a thing to unlock that listing process, because SPACs help you to kind of move that, to actually be better at that valuation conversation. And therefore, potentially, it means that if people are getting better values through SPACs, then there should be more entry into the market.
Thank you very much, Deepak. So just to, Deepak and Mr. Coker have actually, given an explanation, but the thing I just want to emphasize is part of what Deepak had alluded to, that had indicated that just last year alone, if you look at the Bloomberg report, the NSE's all-share index was the best performing index globally, and it was talking about a one-year return of plus 50.03%. Now, over the years, if you look at the statistics and the records in terms of the returns on investment for whether it's institutional investors now, even retail investors, the Nigerian capital market has been known to always give a very high return on investment. So that's for example, is one of the reasons why it is one of the major destinations for investments. Now, I think the second option you also have to look at is in terms of even sustainability itself for the companies who are listed. You know, Mr. Coker and Dipo have talked about the various things that we have put in place, corporate governance rating system. We've put in place certain rules and regulations just to ensure that the companies themselves, they are sustainable, such that there is growth within the companies themselves, there's visibility within the companies themselves, there's various types of incentives itself that the Nigerian Stock Exchange has worked with the government to bring into store. So there are lots of opportunities. So Courtney, one thing I would just encourage you and any other person who wants to have more information on this is to make sure you look at our website, look at the various information that we have there around market performance over time, around the benefits for listing. So thank you very much for that question, Courtney. Now, the second question I would like to put, and I will start with Mr. Coker, because you had talked about, the retail market or the retail investors and the need for any single country basically to ensure that it builds its local market. So I would like to hear, and I'm sure that you know that the Nigerian Stock Exchange basically has a lot of initiatives that have been putting in place around retail investments. But I would like to hear from, the private, from private practitioners, what role do you think that lawyers themselves can play in terms of working together to ensure that the retail investor market is built within the capital market system?
Thank you very much, Sayonwale. I think I've said that over again. It's about education, and it's pretty much about participation. So more importantly, Nigerian lawyer is expected. I mean, if I go to a lawyer for advice, and particularly if it's an investment advice, whether I'm a market woman or an HNI or anybody across, the language is are my funds safe? Will I be able to return? Will I be able to obtain a return value for whatever I've invested generally? Now, as to lawyers and as to the retail market, the core sensitization would come from interest. First, I had to emphasize the fact that in the core capital markets, I feel that there's still a dearth of core expertise in that market. Yes, we have lawyers playing in the capital market, but I feel that there's more potential in the market, particularly in the area of fintech. So what it is that engagements with these individuals, the market woman wants to purchase a piece of land. She would still go to a lawyer. She wants to take a return value on investments she's paid into the bank. She doesn't even know what the banking contract means. It's set to interpretation by a legal practitioner. So it's about engagement education in that market. And how would these players play together? There's no way the regulator wouldn't have a hand in this. There's no way that the companies who are looking as well to raise capital won't have a hand in that. And there's no way that, of course, the lawyers who engender these transactions won't have a play in that. So I think it's more core across education, from the area of the regulator all the way down to the consumer, and in between that entire stratosphere is where we have the lawyers as well. So they also have to just play their role across board. That's how a market woman would realize that rather than take the money and go and put it in an account, I can put it in into a fund that can give me returns. Do you understand? That if she would seek advice from a legal practitioner to say, okay, I've just put out this particular mid-level investments and I've just sold, my little this thing and I have a set of returns, how do I invest? And, they can channel those individuals into that market. I know it's a growing market, but we see that in those days, in the early years, you would have cocoa farmers listening to the budget. You'd have cocoa farmers, looking at the potentials of what the market is doing. That is the kind of education that we need to go back to. Everyone had a transistor radio in those days to listen to information and get information on return. So I feel that this is just an education process across all the spheres and the stakeholders and players in that market, including lawyers.
Thank you very much. Yes, and I know I asked that question because more and more, if you talk with the normal whether it's the professionals or just, the type of people we talked about, the working class, market women and things like that. There's now a lot of an increased hunger to look for where to invest your money in. I know that a lot of law firms now are engaged in wealth advisory around trying to advise people as to where you put your money, invest your money. So I'm happy you talked about, the need for lawyers themselves to begin to encourage people to not just go to only the typical things that people know: invest in land, invest in property. Everybody now seems to be a property manager, building 4-bedroom or 6-bedroom apartment blocks and things like that. But that there are various means by which people can actually invest in the capital market. And the beauty of the equity investments is that you have a multiple source within that single investment, share investment that you've done. So there's the share appreciation, there's the dividends that comes in from there, there's the rights issue, that comes in from there. So just one single investment can create so many things. And I think it's important that lawyers more and more build their own knowledge around these areas, and then as well encourage, their clients advantage of these multiple sources of investments within the capital market. So I know that time is fast spent, so I'll just push one question to Dikbo. And I know that Mr. Coker had actually alluded to that fact around, talked about, we do have the growth board now at the Nigerian Stock Exchange. And then he talked about the various steps that fintechs need to do in order to get ready. Your audit, your audited accounts, your books have to be in order. Do you have a proper corporate governance system and things like that? What I'd like you, Dipo, to talk about, especially because it's basically part of what you do already now, your own private practice. What I would like to encourage lawyers as to how they can assist their clients, because honestly, I get a lot of lawyers that have a lot of companies that have been in existence for 4, 5, 6 years, profitable companies, and they want to take the next step and the next level. And the lawyers are saying, what can we do to get their books in order? What can we do to help them to ensure that they get to that stage, where whether it's a private equity firm or a venture capital firm, or eventually, wanting to list on the growth board, how do we get them to that stage where they are ready, to take advantage of these available opportunities? And how do we do it at a cost-effective price? Because I know Mr. Coker did talk about the cost implications sometimes of doing these things.
Right. I guess there's sort of small businesses evolve in maybe one or two ways. There's the businesses that the founders have maybe they are serial entrepreneurial types. They have a clear vision. They figure they are going to be in this for 6, 8 years, and they are going to flip it. And because they are so organized, they also appreciate the value of lawyers. They start out everything sort of organized, and they are working with a lawyer from the beginning, and everybody knows we have everything that we do. We have prepared for that future when we are offloading. So we arrange ourselves very well with an organized holding company, subsidiaries, all the shares are properly filed, everything is in place, just everything basically just waiting for the day when you will start those sale conversations, at which point you have a nice binder of stuff that you can just open up and people can look at. And there are maybe the more common instances where somebody has an idea and the idea is not even sure it's promising, and let's see where it goes, and he starts working on it. And in that second scenario, which happens to be more common, you don't always have that lawyer's involvement at the beginning. I mean, sometimes because you're managing costs, sometimes because of other considerations. You are just focused on growing a business and being sure that actually you have something that might be meaningful. And being sure that that thing is growing. And it's easy to, in those instances, easy to just find yourself one day without having sorted out your share ownership or issued shares or properly appointed your directors, or I mean, in many startups, you pivot after some time. So you've been running a particular kind of business and everything was sort of designed around that. And then you realize that the opportunity was really somewhere else, and then you shifted gears. But you didn't bother to regularize any documentations. There are no board resolutions. And all of those things are understandable, because many times when you're starting a business, when you are running the business in the early days, you need to move quickly, you need to get things done. But I think where lawyers can then come in is you can then sort of upfront say, okay, hey, yes, this is where we are now, but let's dial back. Let me do a kind of diagnostic DD of sorts on you and say, okay, well, I mean, if I was working for a prospective investor or I was the counsel to the transaction on an IPO, like all these things will be the issues that I would raise as problems. So let's start fixing them now and let's get to a tidy book that when somebody comes, we can either I can help you take out to approach folks, or that when somebody comes, we are basically ready to go. We already have a data room set up and we are just plug you into the process. So I think that's how people can help. And maybe lawyers can then approach that in different ways. I mean, the more obvious ones, you know somebody well, maybe the person has even been your client for a while. And you then say, hey, you are growing to this point. We think you should start preparing for that possibility. So let's do that diagnostic. Let's do some housekeeping. But there's also, I mean, it's maybe depend on sensitivities. Some folks might feel like it's ambulance chasing, but there's also the possibility where you might, I mean, maybe you've done work with a company in the past, or you've encountered a company in the past, and you know, obviously you are familiar with the founders loosely. You know, this is the kind of company that probably isn't in that shape, but also you are aware that this is the kind of company that might be an interesting target for a buyer. So, I mean, it's a different kind of pitch, but it's a pitch of, hey, we think that you have something great here. We think that it's the kind of thing that we know PE firms are looking at this space now, and we think that easily enough, you may find a couple of them approaching you. Let's figure something out. Let's agree some sort of arrangement where we help you clean up. We help you just showcase yourself to one or two of them. And if a deal happens, these are the terms on which we do it. I know not quite investment banks, but big four consulting outfits do things like that. Sometimes with people that they've encountered, somebody approached them for something, and then maybe to do one audit or to sort out some tax issues, and then they then say, hey, like, actually, this is an interesting business that folks might be interested in. Let's start developing that relationship so that there's no question of, okay, the investors approach the company and then they are looking for somebody. Because we've carried them from the beginning, we are sure that we are the ones that they're going to work with. So it's something that lawyers can think about as well. I mean, if you know what PE firms are looking at or the sectors they are looking at, you can look for interesting companies in that space that you can already tell because it's family owned and stuff that, okay, actually this thing is out of shape. And I mean, it's convenient that CAC is a public record, right? So typically companies have to, even if they are private companies, they have to file accounts. They should be filing their annual returns and CAC tools and things. And so you can do a search and get a sense that this is a promising business, but from what I can see from my search, it appears like it's a mess. And that can be the basis of your pitch for, let me help you clean up in anticipation of what's coming.
Okay, thank you very much, Dikpo. Thank you very much, Mr. Koko, for your time. It has been quite a very elucidating event, and I hope that all the participants have been able to learn a lot more about the Nigerian equities market and areas and opportunities that they can tap into this year. So over to you, Tosin.
Thank you so much. I agree with you, Mrs. Robinson-Ayewale. It has really been a robust and insightful session today. Thank you to our chairman, Mr. George Otomi, and thank you to you, Mrs. Irene. Thank you, Mr. Dipo Okribido and Mr. Abisoye Koka. Thank you so much for this very well-researched and very rich content that you have shared with us today. We know that it takes time to prepare for events like this, and we are really grateful that you have taken out of your busy schedule busy schedule to do this for us. So we are really grateful. And then we're also grateful to our sponsors, G. Elias & Co. and Advocate Law Practice, for making this webinar possible today. And our audience, we want to say a very big thank you to you too. Thank you for participating in today's webinar. Please note that our next webinar series on the future of energy will be coming up on Friday, 22nd of January, 2021 at 11 a.m. And we look forward to engaging you all there. And as I mentioned earlier, registration is ongoing for our 12-week virtual distance learning course on power. It's titled The Dynamics of Power Contracts, Regulation, Contract Negotiation, Documentation, and Project Finances. financing, and it commences on the 16th of February 2021. To get more information about all this, please send a mail to o.sholanke@esq-law.org. Thank you all so much. We have had a really lovely, lovely, lovely day today. So please enjoy the rest of your day.
Bye, everyone. Irene, bye. Abisoye, Dayo, Dipo,
Bye.
well done.
Bye, Mr.
Well
Chair.
done, everybody.
Bye,
Okay.
everybody.
All right then. Bye.